So in looking at your history, I saw that the firm hit the $10 billion AUM marker in 2015. So from 2015 to 2025, in the last decade, you've grown from 10 to 64 billion. So that's remarkable. If we just look at that period of time, the last decade, talk me through some of the big sort of inflection points. How would you tell that growth story to someone?
Well, we get this question all the time because it's certainly in our industry where there's a lot of, our counterparts that have really struggled to grow. We've been really an outlier. And, the question gets around what was the secret sauce or the magic bullet or whatever it is. And that's not there's a lot of factors that come into that. But, part of it has to do with, by 2015, we had been we were a 30-year-old firm, mm-hmm. and we were here. We were permanent. We, we just applied our trade. We stayed to our core competencies. We delivered both investment returns and a great client experience. And there's a lot to be said about just, putting one foot ahead of each other each day and executing. And sooner or later, the market recognizes that. Mm-hmm. And to a large degree, I think that's what it is. Now, I think there's things that have happened in our industry, both on the wealth advisory side and on the investment management side, that kind of shifted to our benefit. Okay. On the investment management side, I think that there was, especially in the institutional marketplace, there was a shift by investors to either index areas of the market they felt were efficient, but look for managers that were alpha generators in areas that they were less efficient. And that's a space that we always were in. Mm-hmm. And so I think there was a demand for what we were doing, and that was recognized maybe post GFC. Mm-hmm. And I think in the wealth advisory space, we spent a lot of time in terms of evolving our offering and expanding our services and resourcing with the right people in critical areas that really continue to hopefully kept us in the forefront in terms of what wealth advisory firms were doing. And again, I think it's, execution, exceeding expectations. And, I'd hate to start a new firm today because there's firms like us that have been doing this for 3 and 4 decades. Mm-hmm. And you just see, the brand gets recognized. So
mm-hmm. just to put a point on that, you mean it's you haven't acquired any businesses
Correct.
to get
Correct.
from the 10 billion in 2015 to the 64 billion today. It's all been
Correct.
grown
It's
here.
all organic growth. Mm-hmm. Yeah. So I think when we think of growth, just to echo what Steve said, let's make sure we have the right products that the clients want, and make sure we're generating alpha there and offering the platform, as Steve said, of what the clients are looking for. And let's make sure we take outstanding care of our clients. And let's make sure we have the right people to do the first 2 things. And that's really what we're focused on. And let's really execute and focus on the things we can control versus the things we can't control. And if we do all of that stuff, we're hoping that we see the results of that. And I think we've been fortunate enough to have seen growth come out of that.
Yeah, if I can add a couple more things, 2 things. One is our business has gone global. So we're an established brand in the U.S., but we're an emerging brand outside the U.S. And so that's been a big change for us over the last 10 years, is that we've seen a significant amount of growth outside the U.S. And then I think number 2 is that in the wealth advisory business, a lot of our counterparts and people who have started firms have come from a career that maybe started in insurance or planning or tax. They're not investment people. Mm-hmm. And so the value proposition is to be excellent in those services, and we have a world-class planning team at Kayne. But when it gets to the pool of capital that needs to be managed in a way to meet the plan, because they're not investment professionals, a lot of times the offering set is to index all your investments,
right?
That it's a commodity. So let's make it as less expensive as possible, least expensive as possible. Well, our clients, there's a big market, and for people who view that is not satisfactory. They're looking for an advisor that has an investment management background, that has a point of view of what's happening in a global economy, has a point of view of what's happening in the capital markets, and can express that view in a very bespoke way to our clients and offer them interesting investment options that hopefully are a bit more sophisticated than what they receive from a lot of people in our industry. And so I think that gets recognized over time too. Here's some smart people. They have a point of view. They understand what I'm looking for. They're creating something for me in a customized way. And that's a very different model than how a lot of firms in our business operate.